Hey everyone, this is Charles Neighbor again with another quick video of some individual stocks and some sectors at a very high level and upcoming earnings for the next week, which is February 1st week. So let's quickly look at the sectors overall, how they have been performing during the last week. So we are looking at energy being the outperformer, and then followed by financials and there is a little bit communications, and technology also did pretty good overall. So we are kind of looking at some of the sectors outperforming as part of the bounce that happened during the last week. So let's do a quick look at some of the sectors, how far they pulled back, and what is the overall percentage of pullback. So when we look at this kind of analysis, this is a percentage pullback from the all-time highs. We are looking at XLE is very close to 2% pullback. Just that's pretty much it. And then we are looking at followed by the staples and financials and SPY overall sitting at 8%. So if you want to kind of take a look at some of the sectors that might be very interesting, so these are outperforming the SPY. Okay, energy, consumer staples, and financials are outperforming, and followed by the industrials very closely, right? So energy, industrials are kind of inflationary trades, so I think that makes sense to have some exposure to those sectors. And yeah, XLC I think it's beaten up because of Netflix and other bad earnings there. XLY because of the inflation and a lot of people, the consumer spending has gone down, so consumer discretionary is the worst performance, which includes Amazon, all these kind of bigger stores, I would say. So I think you have to be aware of these in these sectors, and then how they are performing and which sectors you should have some exposure to. So overall, looking at 1 month, only energy has been higher. Remaining all sectors are in deep red. And if the market really finds its way to bounce back as a V-shaped reversal or in more of a W-shaped reversal, you'll be looking at the typical outperformers, which are um, year to date, 1 year, technology, and sector. So overall, when you look at a very long-term picture, they come and neutralize themselves to certain percentage, but technology has been performing better. I think it will take the baton back and start outperforming. I would like to see that for the overall strength of it. Small cap also very beaten up, so they might bounce back, and financials, most of the financial companies come under small cap. So I think we'll see the regional banks come under that. So we'll see, they outperforming and performing better. So just a quick look at what's upcoming for the next week from earnings perspective. Looks like we have ExxonMobil, energy company, some retail, some home builders, Starbucks, Google, PayPal, AMD, EA, Gilead, Spotify, Facebook, Amazon. Okay, so we have all the big companies coming up in. So that's why I think I wanted to do a quick look at what how they are looking at, and then let's take it from there. So at a very high level, let's start with the first one, which is ExxonMobil. So what is happening here is it has, from the weekly perspective, it gained it move the move above 200 weeks average has been strong, and it is continuing that. And overall, from all-time high perspective, it is just 15% lower. Yeah, 15.7 percent lower from all-time high perspective. So there is a good chance that there is this downtrend, but it can continue higher if in the inflationary conditions. Yes, right. So implied move of around 2.5 percentage. We'll be looking at a move towards 80. Worst case, like two times implied move, or a move back to 70. So more or less like upper Bollinger Band and 20 days average is what support and resistances. So let's do a quick look at the next one, which is UPS. So I think the MMM money maker move has not been populated yet for this UPS, so we have to wait until next week. Looks like, but overall, a lot of pullback below 200 days average. If the earnings is good, maybe it will retest those levels. Implied move so far for this one is going to be plus or minus $13. Okay, so that's what it is, around 11.94. So which will take it to close to the 50 weeks average to the higher end, and down to 180-ish. Okay, so we have to wait and see. The chart as such is not looking that great, so I would like to kind of pass it on. Next, let's look at AMD. Why it's not showing? So there was some issue with the script. So UPS, we are looking at a pullback to the implied move is taking around $12, a move back to the about 20 days average, or a further pullback. Okay, so not that strong setting, I would say. So I'll pass it along. AMD. For people who are into semiconductors, AMD has pulled back quite a bit, around 35% of its all-time high values. So it's still below 200 days average, and an implied move of $7 into the earnings might take it back. We also add. So volatility has spiked up towards the end of it, and it's kind of pulling back a little bit, but still higher at around 83 percentile. So on a weekly basis, it did that touchdown on 50 weeks average. So if you are bullish into semiconductors, probably selling around 90 puts around 90 for February 18th expiration might work out. Hoping for a bounce, right? And then is PayPal. It pulled back 47% from all-time highs. Wow, so that's with most of the stocks, and there's the implied move of around 7% to the upside, that it takes to 175 to the upside, and then towards the downside, it's going to be around 150, the implied move as such. So middle Bollinger, lower Bollinger band, where it stays, it's positioned itself into that. And next comes Google. So it's at 200 weeks average. So maybe it will bounce from here after this much book pullback. There is a continuous selling pressure for whatever reason. So I would rather, if you are positioned bullish, or if you enter into some kind of put spread, and if you see a bounce or pop, and then if you see profits, better take profits and run, because this is the technical is in such a bad shape that they will try to kind of sell every pop that happens in this stock. Google. Google coming back above 200 days average, implied move takes it to around 2800 to the upside, and 2530 to the downside. So from weekly perspective, let's change this time frame to just 2 years for our simplicity. It gained back 50 weeks average. Microsoft did good review, good guidance, and then Apple also did good from earnings perspective. So we might be looking at probably we can look at constructively. The only thing I would say is, international exposure, currency fluctuations, the strong US dollar might have some negative impact, headwind for this one, but we have to wait and see how it guides. But that 2780 or 2800 aligns with that weekly middle Bollinger Band. Okay, so it's just down 11.6%. 11.6% from all-time high, so it's a comparatively strong stock, I would say, when compared to some other stocks like PayPal. So if you want to play to the bullish side, probably it is one thing. Again, I probably sell iron condors of the 2x move or something like that, which is more involving premium selling than paying premium and buying calls or call spreads because the IV is high into earnings. So let's look at Starbucks. It's down 23% from all-time high, and when we look at weekly also, it's kind of below 100 weeks average. There is some room to run. A move of $4.3 up and down to 100 and down to 90s. Okay. So nothing much to say here. There is no major support or technical strongness. So I will pass it along. Again, selling an iron condor or selling a put spread if you are bullish makes sense because the IV is elevated here. Electronic Arts, very strong sideways consolidation. In no man's land, very choppy, and we're looking at around 6% to 140-ish, about 200 days average, and 125 to the downside. No specific trades as that are trade ideas on this one. Facebook. Facebook in no man's land and daily, like no other, it's below 200 days average. On weekly, it's actually very close to 100 weeks average, and implied move is taking it back to that middle Bollinger Band 320-ish and or 285 to the downside. So if you think it's the selling has, the selling is done and the bottom is formed, then probably the cloud resistance around 311. So if you can, if you are positive about it, maybe you can play to that 311 area. Um, a bounce to 311 area by whatever means, right? For example, selling a 265 put, something like that, or a put spread based on that. But yeah, I think I would be a buyer if it comes to this level than here until it proves by regaining back some of these averages. But so far, it doesn't look like that. So let's see what actually happened with Apple, right? Apple was at 100 days average. It gave good guidance, very nice earnings. So it bounced almost like how much? 7%, I would say. Um, After the earnings. So this is the kind of move that you are expecting to see, and it bounced back all the way to 20 period average. So that's what typically will happen. Most of these implied moves are looking for a bounce back to 20 period average. And Microsoft, let's go and see that one quickly. Yeah, it also bounced back after earnings to 20 period average. So same thing might happen with some of these stocks also. 20 period average is around 2728 in Google, and Facebook it is around 320-ish. So I think that's what you'll see in on the eve of a good earnings. And if the market is good on Monday, that move could happen before the earnings, and when the earning announcement happens, actual earning announcement happens, you might not see any move. It might just go flat, stay flat. okay, that bounce could happen pre-earnings also. So that's a possibility there. And let's see what else. I think that's pretty much it. Amazon is there. Amazon pulled back 23.6 percentage. There is a huge down because of, I mean, I don't know what there were any catalyst for a lot of buying to happen in the last quarter. So if you think it's oversold, we are expecting a move of around $120 to the in either direction. So that will take to 3,000, around figure 3,000, or around 2750. The 200 weeks, it's probably in between 100 and 150, 200 averages. So maybe 150th average. We're talking about it could be a support. Yeah, again, I would sell some put spreads. IV was higher, but now it came pull back a little bit. If you are bullish, selling in iron condors or put spreads might be a good idea. Yeah, so it's not looking that great. There is a lot of distribution, and then it's in a markdown phase. So plus or minus $120 is what Amazon is looking at as of now. What other things? So Marathon is there again. All the oil companies are there. Eli Lilly, it did not lose 200 days average at all, right? It actually held back every possible way, and it's kind of bouncing back. So it's looking a little bit stronger when compared to other stocks, and we have to see again bounce back. The 20 days average is what the implied move is saying towards the positive side. Unity oversold one of the Cathy Wood's investments, and yeah, I don't see any sign of bounce, right? 5 days average, sell, 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 not even at 5 days average. So I don't know. Probably it might bounce back if the earnings are good to the 20 days average, similar to what all other stocks are implying. Sketchers. Sketchers holding above the lower Bollinger Band, 25% down from all-time highs, forming a double bottom there, and it could bounce to the cloud, which is around, even though implied move says it can go all the way to 45, but 43 seems to be a resistance if you would like to play for a bounce until 43 on a positive earnings there. GoPro. Yeah, 10% move to the upside, 929, 773. You can play with stocks directly if you are bullish on this one because of the low stock value than trying to uh, mess around with options there. What else? Multi multi group, home construction, real estate, hypes, all this stuff are there. There are some supply chain issues, right, and labor shortages and stuff. So all those might be weighing in, and that probably is the reason why it's so bearish, like 200 days and 100 days average is below that one. Yeah, but overall, it's also trying to kind of show a bounce about 7% to above 55 level and 47.5 level. Weekly, it tried to close above, no, below 20 weeks average. So maybe some bounce back to 20 days average or 50 days average, which is around 53.8, could be in cards. And waste management, below 200 days average, a bounce back to 200 days average is possible. That's pretty straightforward. And Spotify. Clear head and shoulders formation, down move, not looking that great, very, very bearish. So we'll pass it on. Snap. Snapchat 200 weeks average. 200 weeks average is a very interesting point, right? When you talk about 200 weeks average, it's close to 4 years average point. So I think it probably could be a good decent buy zone here. So maybe sell a put 20 puts, and if it really comes to that level, you buy it. Otherwise, you're selling very hyper premium and collect some juicy things. So selling naked puts or a put spreads around 20 for March or February expiration might work out. Or because the stock value is less, you can even play stocks, hoping for a bounce to that 37.7 level if you think it's going to be good. SKWS. SKWS. SWKS. So this is a technology company. 31.39 percentage pullback. Again, the implied move is pointing to a 20 days touchdown, 20 days touch there, right? So I think more or less, like if you can, if you look at a chart and plot 20 days average, that would be probably a bounce on earnings if it goes there. That has been a consistent trend for all the stocks. So Royal Caribbean, travel industry, higher lows from December perspective, below all averages. Nothing to see here, very strong sideways, but yeah, I will not touch it. So some insurance companies also there, Cigna and Humana are there. About 200 days average, the pullback did not affect that much. So looking good, forming a kind of a, after this big move, some bull flag formation. So if you would like to kind of play to the upside to 245, this seems okay, about 200 days average, with 200 days average at the stop. IV is elevated but not that high. Yeah, maybe good thing on weekly is about 5 weeks average, 8 weeks average, 50 weeks average. So everything, it's very constructive from that perspective. So Cigna earnings, if you want to play to the upside. And what else is there? Humana. It should be pretty similar to Cigna. No, it's actually in oversold condition. So if you have to pick between, not oversold, I would say below 200, 100 days average, and weekly also it's below 5, 8, and 100. So if you have to choose between Cigna and Humana, probably Cigna would be the way to go. And but if you want a better percentage of returns, if you're playing to upside, I think the chart looks constructive on daily, a higher lows forming, and the 20 days average to 400-ish might work out. Okay, so that was a very, very quick review of some of the upcoming earnings and some levels to watch for. So let's do a quick sector thing where we can quickly look at how they are doing. So let's start with energy, which has been stronger, immune to whatever the market pullback that happened, looking solid from long-term perspective. Yeah, and probably it might go to that all-time high if this continues. Okay, so it's just 17.3% below that. XLP above the daily cloud, gain back the 50-week averages and 5 and 8 averages, and there is some more room to upside here. So yeah, consumer staples looks good here. finances, 200 days average is holding, and 50 weeks average is holding. We would like to see a move above that 39 for continued higher move. And next is industrials, 7.5% pullback. It needs to prove itself by moving above the 200 days average. XLV, it reclaimed the 200 days average and has some upside. With Gilead earnings coming in, probably it'll have some. Some of the strength could be based on that. So let's quickly see Gilead. Weekly cloud touchdown, reclaimed quickly those averages, but very the, they're clustered very tightly in a specific range. It could lose that immediately by just moving 50 cents. Okay, so you can't count on that, but again, we have to wait and see how earnings has to offer. A move above the cloud probably will be good. It has been in a very strong consolidatory phase after this big down move, right? So 8% down XLV, so there might be some leg to higher. So XLB as such, holding weekly support. I mean, not that great, 10% down from all-time highs. Real estate bouncing back hard, gaining some averages. 50-week support. The buy volume is not that great. XLK technology, very nice bounce back. I would want this sector, I mean, with Apple and Microsoft doing good, I want this sector to outperform, and you can clearly play either QQQ or this one to upside. QQQ will mention 358 and 365 are levels, and for this one looks like 162 is the level. So you can play for that move. That is a safe play for waiting play for catch up. After that, what will happen, no one knows. But until then, you can play that catch up in technology stocks. XLC, Netflix did probably a lot of damage here. Yeah, so it has to prove itself. It's not looking that strong yet. Very far away from 200 days average. But this was one of the sectors that gave a lot of uh, growth after that pullback. So it's around how much percentage wise it kept on chugging along through the COVID and stuff. So it was around 120%, 121%. So it moved quite strong through the COVID. Now it kind of pulled back, cloud bottom as support. I would like to see it go above core, at least test the cloud top again and 50 weeks average, 20 weeks average. So XLC, very beaten up name, and XLY, consumer discretionary, the Teslas and Amazon, right? So some bounce could happen. So Tesla also some bounce could happen. So let's quickly look at some of the stocks that we typically look at. Um, Tesla, what happened in Tesla? Tesla, it filled all the gaps that were there, which is pretty good. 200 days touchdown. So from gap filling perspective, it did good. So I can remove these gaps, and there is nothing much further to kind of go um, out of that. So I think we would like to see some constructiveness happening here, like gaining 5 days average and 8 days average, 900 moving above 900 and 950. I think that would be good. Overall 50 weeks average, and last time it kind of moved to that 50 weeks average. You see how it kind of did that, stayed above that and do the slow grind higher. I think that will be the case here too. That we'll see a big bounce back to this level and breakout higher. All that depends on how the overall market reverses. But as of now, we have a resistance of around 950 and support around 780. So you can probably sell some put spreads and play that sideways action in Tesla. So Tesla, Google, Facebook, Amazon, Netflix, 45% down. It was at 600s and then now it is around 300. So it's a very, very good opportunity. I think looks like what was the news there? Bill Ackman, right? So Bill Ackman kind of got some stakes in Netflix, and so people who if they were ready to kind of buy it at around 550, 600, and they are getting buyback opportunity at 385. And we looked at some long-term supports also. This was a kind of a decent support level from long-term perspective. You can nibble some along, or if you have the capacity to sell naked puts, you can sell 350. And if it comes lower, you'll be assigned those stocks. Otherwise, you'll just kind of play that sideways consolidation. So a bounce to 423 is quite possible to test that 200 weeks average, and then it makes a decision. So that's pretty much it. We covered a lot of stocks quickly. I know it was not structured, but I just wanted to kind of give look at some of the stocks and technical setups that has earnings upcoming. Okay, so hope that was helpful. See you in the next weekend review meeting. I'll publish this soon. Thanks.